Good evening, everybody. This is Tim Knight, and hello out there to all my fellow Muppets for the day. Today is Thursday, January 21st, 2010, and it was a great day for the Bears. Dow was down about 200 points, and I wanted to talk unscripted as usual, which will explain any of the ums and ers as I think about what to say next, about what I see as a change of control in the market. First, let's take a brief look here at this line graph of the past 60 days of the ES. Now, this area here, I'll just sort of box this zone. This guy was a real nemesis for us all because it was, up and down and up and down and up and down. And all through that was just frustration and exasperation and made it almost impossible to trade. Because naturally, during those ups, it's very exhilarating for the bulls. It eggs them on, gives them confidence. They pile into the positions. And then they get whacked on the other side of it. And by the same token for the Bears, during these little miniature meltdowns, it seems like the top's in, and it looks like things are finally breaking down, and it whips up again, and the Bears lose money. So I don't think very many people, until very recently, bulls or bears, have been able to trade this profitably unless they are just superbly adept ES traders that are timing these entry and exit points very well. So during the time this was formed, it was really crummy news because it was just exasperating. But here's the flip side of it, and it's good news because I'd said before, this is going to break above or below this consolidation area, and I don't need to tell you that it's broken below. You can see right in front of you. And I think this is very important because it makes it almost too easy for the Bears to do what needs to be done. In other words, as I see it, you kind of can't go wrong. If the market rallies, it is very apparent where shorting should be done. About 1127.50 on this graph or so would make a very alluring area to short. If the market falls, well, that's just plain good anyway. I would actually at this point prefer to see a rise. As I'm glancing over at my big old screen over there, the ES is down 2.25. I guess Google's 25 plus point drop after hours isn't very inspiring. So, in any case, my point here is that the Bears, I think, have kind of seized the baton, and this kind of thing makes it much easier to make decisions. So, we can also see here, and I'll go back to a more normal OHLC graph, that this trend line, which has been in place since the so painful denial of the head and shoulders pattern back in July, just... ugh, what a terrible memory. That trend line is very clearly violated. And once again, this speaks well to the notion of a retracement. I am currently about 63% in positions right now, all of them short. I actually tried late today with some huge, giant, never traded anything that size before positions on the SPY, just because I wanted to take advantage of any overnight lift and so forth. I'm not trading the ES anymore right now, and I just wasn't comfortable holding an overnight position on that. I would be delighted to do that in the morning if things look like they're going that way. But I just, holding zillions of dollars worth of spiders overnight, no thanks. But I do think the healthiest thing for us would be a push back up to the 1125 to 1130 type zone. That would be just like shooting fish in a barrel. Now, what else shall I talk about? Let me just thumb through a few indexes here. Same old story on the Nasdaq. Just an absolutely sensational trend line meeting right there. It's the likelihood of the Nasdaq Composite going much higher is about as likely as that Coakley woman in Massachusetts being asked to do the keynote at the next Democratic convention. Is this no? It's not going to happen. China's really interesting here. It's just apparently the world economy savior China is really starting to cough up blood on their equity market here. And I don't have it in front of me, but I saw a graph of the Hang Seng Index, which had just a fantastic head and shoulders pattern. Very exciting to see. Precious metals, I'm kind of staying away from. Gary Savage has been pretty adamant about how it's a great time to get back into these things. Could be either long or short. I'm kind of staying away. I had a GDX short position. I closed yesterday at a nice profit. Would have been more profitable today, but I just precious metals are weird. I just they're odd, so I'm staying away from them for the moment. The Dow actually had been much stronger than the other indexes until recently. Today it kind of gave up the ghost, whereas the smaller caps actually had smaller drops than this. But here again, we see a trend line break, very clear going on. And when I speak of the change of baton, it really has to do with, I think that we have moved from an environment where any dip is just another bullish buying opportunity, and the bulls just smack the bears across the face each and every time. If this was indeed the top that I talked about back on the 19th, that the shoe's on the other foot, so that every time there's a lift in the market, that'll be just another golden opportunity to short some more, and the bulls get to hang out in the Iron Maiden for a while instead. Here again, mid caps. I mean, good God in heaven, look at this. I mean, does this scream pending bear market to you, or does it say it's a great time to buy stocks? I hope it says it's a great time to buy stocks for some big buyers out there, because that'll make it a lot easier for good old Tim to short at better prices. So you bid those things up. Same old list, same old story. Big old Fibonacci retracement levels. Here's the OEX. A couple of really big levels had been hit and are now beneath, including this one, which spans back up to 2000 and down to '09. So kind of a confluence of these two Fibonacci's of 50%, as well as the other big old red one there. Now the Russell, my long-standing favorite, and I'll probably just kind of close talking about the Russell here. This one came beads of sweat running down my brow close to breaking above that trend line back on the 19th. We can see this trend line going down like so. So 1, 2, 3. And here's the thing. This line I've drawn here at 624.21, that is sort of the bull's last hope. If that is broken to the downside, and I am kind of confident it will be, I think that's when the party really starts. As I said earlier, I wouldn't mind in the least, because I'm not fully loaded yet. I've got plenty of cash ready for more positions. I'm not fully loaded yet. Having this thing bounce up some would be kind of nice before it kind of cracks through here, but that remains to be seen. So I do think that is a quite important level to reach. I actually haven't drawn a trend line on this one. Let's just do it live here in person and see what it does for us. Let's make sure this is nice and perfect, because I'm really hung up about such things. All right, so I think, yeah, it hasn't broken that trend line yet, and that's actually kind of cool. That's fine. So if we can get a bounce up, which seems far-fetched considering Google, and then crack that, that would be cool. Anyway, see you tomorrow. Coming up 10-minute mark, and adios, muchachos.